direct arm trading of iron ore. Resources are always the most crucial factor in a nation's development, particularly for China, which is growing quickly and has a high demand for resources. Due to this, China has always maintained positive economic relations with some of the largest energy exporters in the world, like Saudi Arabia and Russia. Australia was previously one of China's reliable trading partners, but over time, economic relations between the two countries have deteriorated, and the Australian government has even begun to impose restrictions on China's imports of iron ore. But what's going on now that Australia appears to be unable to continue and has started to receive iron ore directly at its doorstep and use arms settlement? Australia iron ore is one of the abundant resources in China. Every year, China's steel industry requires a significant amount of iron ore, and Australia is unquestionably the greatest option. In addition to the fact that we are aware of the significance of Australian iron ore for our nation, Australia is also acutely aware of this. Australia enjoys an unrivaled position in the pricing of iron ore due to its energy exports. However, Australia is not a very good trade partner in this regard, as evidenced by the fact that between 2018 and 2022, the amount of iron ore it sells us doubles completely 2.5 times. But despite Australia's location on the ground, we must put up with the shortage of iron ore because it is a resource we cannot live without. Australia has gained significant profits from its resources in China thanks to numerous concessions from Chinese businesses, but the country is still unsatisfied. Australia intends to use their strong position in the iron ore deal with China after 2019 to pressure us into making significant concessions. We cannot accept its strategy, thus China started to impose import restrictions on iron ore from Australia. A fifth of Australia's annual foreign commerce is made up of the sale of iron ore, which is sold to China for 70% of its total supply. Australia's international trade has clearly been severely harmed by China's limitation on the import of iron ore from Australia. The Australians, however, laughed this off, claiming that since China is so reliant on Australian iron ore, limiting imports of the commodity now would be the next best thing and would plainly result in a lose-lose situation. Therefore, Australia believes that all it needs to do is wait until China can no longer resist before seizing the chance to raise its demands. It's unfortunate that they miscalculated because they didn't anticipate being the first to request the resumption of trade. What happened? Due to a decrease in its reliance on Australian iron ore, China was able to resolve the iron ore crisis. But after China, Australia has been unable to find a buyer with comparable purchasing power. What steps were taken to lessen China's reliance on Australia? 1. Reform of the import arrangement for iron ore. There was a significant iron ore shortage in the Chinese steel market after the cooperation with Australia, which unquestionably had an immediate effect on the Chinese steel sector. The claim that iron ore is only found in Australia is untrue, though. China quickly sought out other nations after a brief period of market unrest, who can't raise their hand to greet such a significant customer when China has the highest annual demand for iron ore in the world. After a few years, there are now multiple nations that buy steel from China, and Australia has a formidable rival to claim credit for this development. To boost China's production of iron ore, even though it is somewhat challenging to mine iron ore in China, we can travel outside to do it. Some underdeveloped areas have rich mineral resources, but they haven't been able to perfect mining techniques. China can take this opportunity to enhance the output of its own iron ore by renting out its own mine. China won't need to rely as much on imports once her production is boosted and iron ore reserves can be guaranteed. Because there are too many Chinese steel producers in Australia may profit from the industry's competitiveness. Australia has the audacity to hike prices on occasion. However, if the government sets up these businesses to bargain prices with Australia, Australia will be forced to submit in the face of such big orders. Australia now recognizes the significance of China as a result of this experience and desires to resume collaboration with China. According to reports, Australia started looking for ways to work with China this year and expressed a willingness to use the YUAN payment system for iron ore. The Global Times reports that BAP Billiton, an Australian mining company, recently celebrated the arrival of its first shipload of iron ore settled in Yuan by cutting a ribbon with China's Shandong Port Group's Rizhao Port. The official start of BAP Billiton's raw iron ore spot trade in Chinese ports was reportedly marked by the shipment of iron ore 2 weeks ago from the Australian port of Victoria. According to reports, Jeremy Lewis, vice president of the company, told the media that Billiton will continue to follow its traditional U.S. iron ore sales channel, but U.S. sales in the RARM spot market at the port BS sales in the RARM spot market at the port Billiton will actively promote fair and transparent market participation. This might not seem like a big deal, but in the context of China-Australia relations, aggressive U.S. interest rate increases, and the upheaval of the international financial system, it has nonetheless drawn a lot of attention. For China, this is a success in the ongoing effort to internationalize the yuan and a sign that the percentage of international trade settled in yuan is increasing. De-dollarization, or lowering the percentage of dollars in foreign exchange reserves, has become urgently necessary to protect national interests in light of Washington's repeated waving of the dollar stick and the losses experienced by Russia, Iran, and other nations as a result of dollar sanctions. A report published by the U.S. Treasury Department last month shows that at least 28 nations that hold us debt are selling off significantly, and China is continuing progressively lowering its holdings of us treasuries. China has sold off roughly $100.08 billion in the previous 14 months. In the previous 14 months, $100.8 billion. Therefore, from China's perspective, the introduction of the iron ore yuan is a natural outcome of the growth of the global market order. But iron ore is Australia's most valuable strategic resource. So it's ironic that the Australian government hasn't responded to Billiton's acceptance of the RMB, acting as if it doesn't exist. If it had been Morrison and Dutton, they would have found a way to make a big deal out of it and attempt to stir things up. It's possible that Billiton had this concept in the past, but it wasn't implemented until after Morrison's resignation due to the Australian government's opposition at the time. But the new Prime Minister Albanese also appears to have his own stubbornness. A few days ago, he also told the media that Australia would not accept China's proposals at the Joint Foreign Ministers meeting and would not change its stance on any issue. In relation to today's news of the arrival of iron ore in ARM, Albanese is saying the most ruthless words, though he is not bowing to the loudest head. And it can also be seen that it is true. Despite what the Canberra administration may have claimed, it is obvious that the Australian business sector has come to the conclusion that we cannot follow the United States in growing our economy without turning to the Chinese market. The yuan is starting to make its impact in global commodities trading, which is undoubtedly bad news for Washington because it is a jab at the dollar and U.S. hegemony. Australian mining companies are now accepting yuan payments, and Indian cement firms were doing the same before that. As we all know, once the offensive and defensive alliances diverge, they will only grow stronger. For Australia, gradually separating itself from us value supremacy is likely to start with the RARM iron ore. This is also a sign that Australia and the U.S. have started to diverge on a number of issues. The progressive separation of Australia from American values superiority is likely to begin with RARM iron ore.